lack is because there wasn't a huge demand up to recently, and now there is a demand. The Western world has always had a demand, well, certainly in my working lifetime, they've always had a demand, a high demand for actuaries. So most people really go abroad. You study and you work abroad on that. But as I said, that is changing now. And the likes of EY, the companies you mentioned, are now looking for actuaries in order to be able to better fulfill the requirement under the IFRS.
Yes, so the International Financial Reporting Standards, which we've adopted, and now companies, for example, listed on the stock exchange, becomes a must for everyone to fulfill the IFRS conditions.
That's correct.
Has raised the game as far as actuarial science is concerned.
Yeah, you put it well.
Yeah, now, but there's a cost to this, because everyone knows that meeting IFRS, like the Basel 1, 2, 3, whatever, or now the fourth one being considered, comes at a cost to companies.
Yes. It does come at a cost, but to be honest, it's not a major cost. It also comes, you know, there's always benefits, and you know, there are benefits also. And the key benefit is that there's proper accountability now. And you can reconcile one account to the other properly in terms of the issues we're talking about. And there is a level playing field in terms of reporting template. You can now compare one company a bit more convincingly or with a higher level of confidence with another company than pre-IFRS. So I think the benefits outweigh the costs, in my view. But certainly there is a cost.
In terms of integrity of the numbers?
In terms of the benefits, that is? Yes, in terms of integrity of the numbers, and particularly in terms of being able to compare company A to company B. Because the template, the calculation template is virtually level playing, it's easy to compare. 6 years ago, you could not compare one insurance company to the other adequately. But now you can. You can. There's a lot more transparency, a lot more confidence, and that's what the financial sector needs.
It makes the job of the financial advisors, reporting accountants, auditors, and others, and even the regulators. Does it make their job a lot easier?
I would say harder, but in the sense that you need to really inquire, you need to dig deep. But in terms of interpretation, the users of the accounts have, it makes the users of the accounts have an easier job now than hitherto. In that they don't really need to do any further, not much further underground or background work. When you see a set of accounts right now, certainly with regard to the insurance sector, I mean, you have a high level of confidence that what you see is right.
For the regulators, like PENCOM, the Central Bank, and the SEC, you think this is a job made easy, or they need to scale up as well in terms of their understanding?
It makes their job easy in terms of they now have figures they can rely upon, but then they also need to scale up so that they lead the industry in terms of directives, in terms of needs. Really, they need to scale up to lead us to the next level. We're not at the summit yet. We need to go to another level, and they need to lead us to that.
But where do you think the summit is from looking in from the outside? You've practiced outside the country. So where do you think the summit is?
The summit is evolving, but certainly the next layer is breaking down even the numbers we have into various sectors. For instance, an insurance company has, let's just say a life insurance company, writes various types of businesses. You see the pooled figures, but it's now, boards are actually beginning to do that now, to see what type of business, what part of my business led to this profit, what part of this business led to my loss. And that reflects on the kind of products they sell. It's basic, it helps. What this would lead us to is better strategy planning. And that is already beginning to happen.
And that means a lot for the balance sheet. Because the bottom line is the balance sheet.
Yeah, absolutely. Absolutely. The bottom line is the balance sheet. The bottom line also, the profit and loss leads to the balance sheet. And those two items are very critical. And now they are significantly more transparent and true.
Aside insurance
yes.
and pensions,
yes.
what other sectors of the economy do you think this could be a game changer? Perhaps the oil and gas, I'm inclined to ask.
Oil and gas, yes, I'll answer that in a minute, but the immediate thing that comes to mind is health. The health sector, health service sector actually uses a lot of actuarial work now. I mean, right now we actually work for at least 2 states where the focus is how much should the state put aside for each individual in order to provide free health or some level of health provision in general hospitals. And we're beginning to look at the utilization. What kind of illnesses do people take? On primary care, for instance, malaria, how often is malaria occurring to an individual? What is the cost of treating malaria? And based on that, how much premium should that person pay or should be paid for that person in order that when malaria comes, the person does not go to their bank account to look for money, but can quickly go to the hospital with the card and say, I'm a member of this scheme, so give me free health. Give me treatment immediately without me paying now. And there's a tremendous increase in that. And I think that's the next place it will happen.
So health has gone beyond the laboratory, medical sciences into what you call the scientific mathematical, actuarial quantification.
Yeah, I think that's you're quite right. That's the next territory, and it's beginning to happen.
So that conversation, I'm sure we're just scratching the surface.
Yes.
in terms of healthcare provision in Nigeria at all levels. Yes. It's good to have you here.
Oh, thank you very much.
Thank you for coming on the program.
Thanks for having me.
Rotimi Opaise, who is a partner in terms of advisory services at EY. Yeah. Let's go back and finish off at the marketplace.